Next week is another big week for earnings with names like Caterpillar, Disney, Eli Lilly, CSX, and Uber and more reporting results. Will the street turn its attention back to quarterly results, and is that a good thing? Or will it continue to obsess over rates and the Fed? Here to weigh in, Victoria Greene of G Squared Private Wealth and a CNBC contributor, and Jeff Kilburg, KKM Financial founder and CEO. He's also a contributor. Welcome to you both. Victoria, I'm joking a little bit about whether we want to focus on earnings because it was earnings in particular that spooked big tech over the past couple of weeks.
A little bit. I mean, it wasn't horrible. Apple did fine. Meta did fine. Google was fine. It was just a couple little bad apples in there. But I think a lot of this is we need another catalyst. So hopefully they're going to come out and saying, look, our earnings are fine. Our profit margins are growing. We're raising our guidance. It's all about the guidance. And so I do think we need a little help. I will admit it's facing an uphill battle. We've got weak seasonality. August and September, historically kind of tough. We hit very overbought in the markets in June and July. So some of the sell-off is a little bit of kind of repositioning and sentiment. Caterpillar will be huge. They're seen as a huge leading indicator. How's the industrials doing? Industrials didn't hold up great today. So that's one I've definitely got my eye on that we'd love to see a beat and a raise. And I think that'd give the market some confidence.
And China, Victoria, I mean, this goes back, but we always used to watch them for a little bit of that China exposure. And that was undermining some results the past couple of weeks. Maybe not so much in big tech, but everyone from Merck to the retail names, Starbucks, for instance, seeing some pressure there. And that's what also has commodity prices down, yields down, and some of these growth jitters. What do you think is going on with the sustainability of U.S. earnings growth, broadly speaking? Are we going to dodge recession here?
I still think so. I have soft landings in the cards. We're obviously watching it closely because if it's not a soft landing, it's not going to play out like 94, 95. We don't get these slow and steady gradual cuts to keep us on pace. If suddenly we're doing what JP Morgan and Citi said today, hey, we're going to do two mega-sized 50 basis point cuts plus another and 125 this year, that's a huge amount of cuts, and that means things are falling apart. So I am watching carefully, but for now, I think soft landing's intact because earnings actually were fairly good. We're having a broadening rally. If you look at the number of people above the 200-day moving averages, they're still at about 75%. So I don't think this is a bad thing. I do have to remind people markets do come down. We have some seasonality facing us here. Sometimes you can lose money in the short term, but the bull market thesis is still intact and soft landing is still intact, though a little bit less conviction on that after jobs this morning.
Jeff, you have been quite prescient in pointing out that we might have gotten a little bit one-sided. You were warning about NVIDIA. It's still kind of undergoing a reset here. What do you think about the broader market after today?
Well, Kelly, I think you're seeing market sentiment really reveal itself how fragile it is. And we saw two bad data points in ISM as well as a jobs number. And all of a sudden you're seeing people kind of panic, specifically JP Morgan talking about two massive 50 basis point needed rate cuts back to back. So what I envision, a little more volatility, but you're right. In June and July, when I saw the top 10% of the S&P 500 at nearly 36% representation of that benchmark index, that's where we got protected. That's where we started buying puts. Now we're seeing those put premiums double and triple. So we are going to take profits in that, and we are going to sell some puts. We want to see what next week looks like. The earnings, the bar is very high. But at the end of the day, Kelly, it was the perfect storm. We saw since last November, you saw the NASDAQ go up 40%, the S&P 500, 35% in a straight line. So to Vicki's point, this is normal. We should see a little bit of a pullback here, but I don't see any panic. I think it's quite orderly. It's just the velocity that kind of takes your breath away a little bit.
She mentioned she's zeroing in on Caterpillar in particular of the earnings next week. We will get a couple of data points. ISM services Monday. What are you going to be watching?
Earnings are always important, but I think it's going to take a back seat. We're going to be dying to hear what the Fed has to say. Will they do an intra-meeting cut? They're going to see more and more rhetoric about that. Will we be able to wait? We're so impatient. All investors become so impatient, become so conditioned. So I think the focus will be, what will the Fed do before September, if anything? I don't think they will do anything. They need to be prudent. They've always been a little slow to move. And I think if they do insinuate that they're going to do something prior to September, that actually could cause panic and see markets really move lower.